And the last panel is the risk and reward, strategic cannabis investments in a tight capital market. Without further ado, Mr. Finkelstein.
Hi, thanks for coming. My name is Brett Finkelstein. In 2015, I co-founded an investment fund called Fido Partners. We have made, since 2015 to 2020, where we ran 2 funds, about 30 investments in the ancillary ecosystem of what today is a cannabis economy, so we weren't really focused on plant touching assets, no cultivation, no dispensing. We're activist investors in the space. We've been moving the industry forward, hopefully in a responsible way. And today, obviously, things have changed in 2024 coming to 25. A lot of stuff on the regulatory horizon was not in place then, even though we're still not there yet, but obviously state by state, we keep moving the business forward. And I'm happy to moderate this panel with esteemed colleagues of mine. First up, we have Kyle Shenfeld. Kyle is the CEO of Rainbow Realty. I'm just going to read this before. Kyle, if you want to introduce yourself and have everyone introduce themselves,
Sure.
I think it'll be a lot easier.
Nice to be here, those who stayed. I'm Kyle Shenfeld. I'm the CEO of Rainbow Realty Group. Like Brett said, we do real estate-backed lending and real estate buying, exclusively for the cannabis industry. Our thing is we try to underwrite alternate use, traditional real estate value rather than cannabis value. Sometimes it's not all the money an operator needs to get his project done, his or her project done, but it's a lot of the capital. We work with equipment lenders to try to deliver a full package, and that's what we do. We have transactions in 13 states, and we've been doing it for 6 years.
Peter.
Hi, I'm Peter Rosenberg. I've had a 40-year career in financial services, commercial banking, asset management, private equity, investment banking, and I transitioned to doing that into cannabis about 7 years ago. With a partner, we had our own fund, but then I went and joined Merida Capital Partners, which was an established private equity fund, and then worked for Viridian Capital, which was a boutique investment banking firm for cannabis. And now I'm doing that independently and raise capital in all forms, debt, equity, as well as financial advisory for mergers and acquisition transactions.
I'm Adam Grossman. I've been an investor in the space for quite some time, since my dorm room at Florida State University in 2014. Subsequently, Brett was my first boss in the industry. I worked at Fido Partners. I then worked for a startup in San Francisco for 4 years. We had a successful exit and raised some capital from some of my former colleagues and started a fund in the space. Invest in publics, privates, equity, debt, just any part of the capital stack, but cannabis focused.
Ari Galperin, Vice President of Business Development with Salt Cash Finance. We're a sales-based funding lender, equipment receivables, financing. We help provide short-term debt solutions for people in the entities in the cannabis space. We work with dispensaries, groweries, preferably retail operations, anywhere from 1 to 7 locations in terms of dispensaries, but we will do larger multi-store operators. My background has been in finance for the better part of the last 20 years. I've done everything from the insurance side of the business to payment space, all the way up to other types of lending, and excited to be here at the conference today.
Thanks, guys. Obviously, the industry looks a lot different. 2024 going to 25. We've all started a little earlier than that. We're sitting in a ballroom in Florida, and seems to be all eyes on Florida in the cannabis industry on the macro level. You guys want to touch on maybe exposure to Florida, what you guys would see happening in the Florida, any predictions, and how you guys tackle the Florida market on the investment side if Amendment 3 passes or if not Amendment 3 passes?
I could start there. I could tell you, like I said, we have exposure in 13 states now, not Florida. I've looked at a couple deals in Florida in particular that all pencil if Florida goes rec, and are all debatable if it stays. So I'm kind of waiting and hoping it happens, because then I think there's a couple deals I may do in Florida. And I'm optimistic, but unsure. Like everybody else, I'm sure.
Yeah.
Peter, you want to weigh on this as far as your vision?
Sure. So I'm the newcomer to the state. So my business practice focused predominantly on the Western United States, and I started to periodically get opportunities throughout the country, including Florida. And now I'm a full-time resident here, so it's much more germane to my activities. And certainly been studying the polls pretty closely and seeing all the ads and following the debate about the issue. And needless to say, it would be an incredible windfall to the state if it passes. It looks pretty optimistic, but like Kyle said, I've just seen so many wild cards here which have gone the wrong way, and at this point, it is kind of tough to either sell a business or raise capital when there's such a big contingent on whether it will pass and how long that implementation period will be post passage. And so I think the industry in Florida in particular, I think is somewhat stalled out in terms of investment capital, because people are waiting to see what actually happens and what the actions thereafter will be by the government, to try to interfere.
Yeah, to echo some of this sentiment, in this industry, we've been fortunate or unfortunate that we get to pay for certainty. So we could wait for things to actually happen, and then you could invest on that without, quote, missing the boat, as we've seen multiple times. But Florida is absolutely transformational. The way that the market is set up, the capital that's needed from being vertically integrated, it's mandatory. It's going to take a Herculean effort from a capital market standpoint. And when you really look at Florida, there might be 7 companies that could truly capitalize and really put capital to use and build out Canopy and the associating retail that's needed. It's a very expensive endeavor, but there will be some companies that have outsized beneficiaries of this market. And I think the beautiful thing about it is we've seen a little bit of a run up in the publics, but I don't think that, as we've seen, you could pay for certainty and wait for the results to come out and the implementation to take place. And then I think you can act from a capital market standpoint.
And as Adam mentioned, there is going to be a first mover advantage. And I think one of the things that is at least is beneficial within the confines of the merchant cash advance space and receivables-based funding is that it's not really dependent upon that much of what the market moves or what the regulation environment is. As long as the business is in operation, or even if it's a new operation but it has income elsewhere, then we can usually leverage that capital to provide the income needed to be able to go and either open another operation or to expand and grow operation into, for example, the state of Florida. It would be nice to see some additional movers in this space. I'm personally a Florida resident, a new Florida resident, so definitely watching, like Peter is, the regulations as they're coming through. But ultimately, on my side of the spectrum, it really doesn't make a big difference whether the regulation passes or not, as long as the business is either a strong pre-revenue or has at least 3 months of operational experience, either in the market or elsewhere. We can work on creating a funding solution for them.
Right. Sticking with Florida, I think we could hit on, we have a robust market now, 22 license holders, 22 other licenses coming out. Amendment 3 happens or it doesn't happen. Patient count probably close to 1 million. But going back a little, and why this panel is called Tight Market, there are going to be winners and losers in this state. A lot of the winners might be winners as far as adult use coming, as far as more transaction volume going up, but it's still riddled with debt. And maybe we could touch on that and maybe go into that as far as anything in this market that you see other markets kind of take in. Ohio went rec, Maryland went rec. Are you looking at markets like that, emerging markets, in making investments? Kyle, debt, Adam, equity. Peter, seeing any M&A transactions based on some of the things that happen going forward?
I think Adam made a really good point, which is that it's
I taught him well. That's why
you did, but it's like
I'm proud of him.
To Adam's point, like I don't know that there's that much of a premium on acting today versus acting in a month right? Like, so
Well, I think all of us have, being in this industry, had that FOMO, and now I think this chasing the shiny objects, I think it's like more like JOMO, like, oh my God, I have the joy of missing out.
Right.
I don't have to jump in, but I agree with you.
yeah, so I thought that was, I'm going to take that with me, honestly. And like I said, I'm looking at some transactions now which are borderline make sense, but if they're going to be able to double their revenues or more, then of course those deals look a lot better. So like I'm kind of in wait and see mode for right now.
And Florida also, obviously, since we hit on it, is only vertical market.
Yeah.
Those check sizes are going to be a lot bigger.
For
Then
sure.
even to compete with the winners here, maybe not the winners, but compete with the MSOs that are here. If you're not talking about the incumbents, you're talking about someone new.
Right.
You also have to compete with the market,
No,
which is going
for
to take
sure.
a lot of money.
I think there are layers to the capital stack, obviously also, right? Like these are, to go and just finance a massive grow, 20, 25, 30 locations, top to bottom, the working capital for the business, that's a huge loan. I don't know if there's anyone in this industry who's taken down that loan by themselves, right? But it's not to say you can't finance a few locations and try to build out of that, or try to do one phase and grow out of that and then do a second. Like the biggest mistake I've seen throughout the industry in the last 6 years, including states that went wreck, is guys who went and built all 4 phases day one. We want to be the first, we want to have the most weed possible, et cetera, right? Like, I think you're better off building into yourself. You take on too much debt, it doesn't matter how good your business is, like you probably won't survive. I mean, there's so many of those IIPR leases out there that are just, so you don't want to wind up taking on too much money and being in trouble, even if things go well,
No, I think that, hitting on that, I think that no one thought we would be in here today. It's 24 in a tight capital market.
Yeah.
I think everyone that came in, new asset class, same kind of comparison to tech or internet or telephony, trajectory that way. We could help build and shape this industry, and then the capital markets and equity markets really just bottomed out. And now we kind of think about how a business is being built. You have to make money, you have to inspire leadership, you have to back the right companies, and even if you do, give a company debt and they have to pay it back, like Ari would do or something like you would do on the real estate and the assets, now what? Like, what happens if those go wrong? So, Peter, I think you sit on that side as far as marrying and doing M&A work in a market that's good and bad, and I'm sure you've seen multiples on sales kind of get squashed in this industry right now.
Oh yeah, no, there's been huge valuation compression in the industry because one, so many companies have been burned that have put money behind that. So the next round of capital that they invest, if they're willing to even invest at all, many people have abandoned the industry that were early adapters of capital providers. But there's a lot more discipline and focus on fundamentals than there was before. When I first got into this space, as I said about 7 years ago, it truly was the Wild West, and we saw deals. Probably the first headliner deal was, was it Canandaigua Wines or something? Constellation Brands put money into Canopy Growth at a ridiculous valuation, and people just sort of threw caution to the wind and said, oh well, it's cannabis, it's going to grow by exponentially, and it doesn't matter whether the debt ratios are out of whack or the valuation is trading a higher multiple than Apple, but eventually these companies will grow into that valuation, and it just didn't happen. And so with enough casualties now, people who have the capital, which are very, very few these days, particularly for large transactions, they're just really making sure that these companies do have positive cash flow, that they're well managed, that they understand what happens if things don't go as planned. Do they have a plan B or a pivot? And do they have the defensibility to justify their business? So in terms of the leverage, you're seeing a lot of companies try to restructure their debt, but there's really not a lot in these businesses to restructure. Many of them are asset light, and so you can't really rejigger the balance sheet if there's not a lot of assets to work with. And so I just think it's a much more disciplined capital market, and it should be. I mean, it's becoming now more of what other industries have been for years. And I think that that's in addition to the federal illegality, which when that ultimately changes, or when all 50 states and you get some of the traditional commercial banks into the space, they'll demand that kind of discipline. You know, they'll apply the same principles that they've applied to any of their underwriting standards. And you know, until again it happens on its own, you know, before these banks and other, you know, more legitimate financial institutions come in, it's going to be you know, very, very challenging to open up the market to a wider array of capital. And then, you know, the other thing is the companies that are on the acquiring side, they don't want to buy a company that's going to be dilutive to their earnings, and so they're also, even if they could get the capital, or if they do have the capital, they're also being much more judicious about how the companies are performing.
All good points. I think Florida is fascinating for a couple other reasons. From like an equity standpoint, it's probably the most fascinating for a multitude of reasons. One being the vertical integration. It requires a ton of capital, and the amount of companies that are pure play Florida companies. So you have on the public side the Air Wellnesses, where this is a game changer, or a Consortium, where this is a game changer. And then there's some really spectacular privates that maybe this is what pushes interest back into the sector, and you could see a Flowery or a Jungle Boys act and potentially go public in some sort of transaction. But from an equity standpoint, some of these companies have built out a significant sum of canopy, and you have the Jefferson County facility, which Trulieve has. It's a 750,000 square foot facility. It's incredible. The cost structure that they've shown over the last few quarters has consistently gotten better. They've increased gross margins, the quality. There's a great thread, it's called Reddit, FL Trees. Like, you can go on there and you can see kind of like the producer's quality. And there's just really good channel checks that you can do. So from a quality standpoint, there's some producers that stand to have, I mean, obviously we've seen certain stock prices go up quite a bit, but from the equity side, it's pretty, I think out of all the states, this is one that could be a needle mover. Like, looking back at 21, I think a large run-up that we had was associated with the belief that we were going to get some form of safe banking or federal reform, given that we had the House, Senate, and the presidency all blue. But behind that, we actually had really good fundamentals. We had Illinois that turned on, which was a great market. We had New Jersey, New York's improving. But I think Florida, given the MSO dominance and just even some of the independents, the 22 licenses, it's such a healthy move for many of these companies that I think we could get that fundamental growth story back in the sector. And then you also have, obviously, New York improving, and then some other states that seem to be coming online as well, Pennsylvania maybe even next year. So I think this could be the start of a fundamental growth or rejigger of growth in the sector, as you were talking about before.
Yeah, as Peter was mentioning, I mean, there is quite a lot of, like they say, rejiggering. From the sales-based funding standpoint, one of the things that we're looking for is when somebody is either adding values or adding on to their existing operations. So whether their existing operator may be adding a grow up, or if they're a dispensary trying to open another location, those are the things that would benefit the ability for us to be able to provide the capital. In terms of our ability of where we're looking, in terms of, there is a certain sense of agnosticism, whether they're in one particular market or the other. We do like to see new markets because that gives us a little bit more what we find as stability, in the sense that, you know, there's going to be less competition in the area. There's going to be more ability for us to have a secured ROI in our space. As there was mentioned, I mean, you know, we could have the ability to lend in an asset-light model because we're lending against future sales. So even if you're cross-collateralizing another location, but even if you're pre-revenue, there's ways for us to cross-collateralize other assets. There's ways that we can provide as a lending solution, even if you are pre-revenue in a new mover market. So that's the flexibility when it comes to a non-traditional funding, like sales-based funding, a merchant cash advance model where they can provide a solution that is not necessarily something that would be lendable from a traditional standpoint, but we would be able to look at it in that respect. So,
Yeah, the audience here are investors or not investors or thinking about the industry. When I think all of us got in the industry, we were thinking that the federal government will shut it down. We thought it was better for a Democratic election. Trump wins the presidency, higher Sessions, thinks that the industry is going to go to zero. Obviously, it's not going to. That did not happen. We're coming up to another presidency right now, election. What do you guys think are the biggest risk factors on the federal level in cannabis today? U.S. cannabis.
I mean, I think the biggest risk factor is betting on legislative change, right? Just don't bet on that. Make your bets based on current market situation. Figure that's a bonus, and you can be fine. If you bet on legislative change, like everyone did in 2021, probably scary.
Anyone else want to weigh in?
Yeah, no, I agree. As we all know, it's a really complicated issue. It's political, but I think that for the foreseeable future, I think it's going to be under state regulation, under the individual state regulation. I think it's just far too complex, and there's too many different special interest groups that are fighting with one another for it to become a federally mandated, approved drug. I think this whole thing with the descheduling, could just as easily, as Kyle said, be reversed, and it hasn't really even been activated yet. So, I just think it's worked fine for the time being, by having each of the individual states, handle it. It's a mess, of course, because everyone's different and nobody's really learning from each other's mistakes. When you think about it, why couldn't have New York just adapted what worked well in Colorado and California, and what didn't work well they would regulate out? But everyone wants to put their own stamp on how the policy is. So I just don't think it's going to be federal for any time in the foreseeable future.
yeah, I agree.
I was given this advice by an investor in the space. He goes, you know what the DEA stands for? Don't expect anything. And the come to think about it, you have to play the game the way the rules are written. I think a lot of people built businesses, when 280E goes away, we're going to have this fantastic business. Or when this happens, we're going to do all these things. And it goes back to the beginning of the conversation from what Kyle and even Brett said, the JOMO of the joy of missing out. Like, this sector, you get to pay for certainty. Like, it's unbelievable. Some of the valuations of these things, like, we could wait for a lot of the things that we wish to happen actually be enacted and probably get in at fair prices. So to me, I think from a federal standpoint, you're not allowed to say the word safe banking in my house. Like, that's a rule, not allowed. States seem to be what's the unlock that's happening here. But the strange dichotomy that we have is that as more states turn on cannabis markets, it makes it less likely that the federal government needs to do something because, ironically, the states seem to be taking care of it. And I feel like, unfortunately, there might have been a tipping point where the federal government just stopped caring about this because the states seem to be handling it. And so it's this weird thing where we want state adoption, but as we get state adoption, it might push the federal government less likely to move to action. Mm-hmm. So it's a strange thing. I don't know, maybe it's me rationalizing what's going on in my brain, but it's a thesis that I'm running with.
No, I actually agree with you. I would prefer that it would be, stay at the state level. I think the more that we get the federal government involved, I think it might actually be a disservice to the cannabis industry as a whole. If you're, I think in general the Overton window from a cultural standpoint for cannabis, it's becoming wider and wider. So I think you're going to see more states adopting it, and if hopefully we will be able to see that where it is more legal in more states and it stays primarily at the state level, because once you start seeing a mandate at the government level, at the federal level, then trying to get any sort of enacting change after that, it's going to be a mammoth lift. So The other thing is that, you know, there is a joy in status quo. Like, you know, if we have too much federal openness and or federal regulation, in many ways that might close the opportunity to smaller cap companies, which would actually be a negative thing for me personally in our space. You know, we play very well in the 1 to 7 store locations or smaller opportunities. So if you're having JP Morgan Chase coming in, you know, that also opens it to a larger type of aggregator in terms of an open source company that would be coming in and trying to really create a larger vertical integration. So that's going to, in my mind, take away an opportunity for the smaller store operators. So in some sense, you know, status quo is a good thing. So.
Yeah. And even the operators at the state level, they don't want to see necessarily federal. I mean, in some cases, you know, it makes their operations more efficient from a cost point of view, but it also opens it up to tremendous competition. And right now, they're somewhat insulated from, you know, for instance, in California, there's very little MSO presence there, and they certainly don't want to see the larger players come in.
It makes me wonder, like, if you get almost every state adopting weed and the federal government's not going to do anything about it, like, do normal or almost normal capital markets like ever open up without federal legalization?
Right.
Because like you could have 49 states adopt it, and if it's federally legal, like institutions I don't think are going to invest in this stuff, and I don't think banks are going to lend you money. So it's just an interesting.
No, I think that it's obviously it's going to be a high risk industry, but you know, drafting on what Kyle said, what do you guys think the industry looks like if prohibition happens?
If prohibition happens?
If prohibition ends?
Prohibition ends, sorry. Prohibition ends.
Yeah, I think, go ahead.
Go ahead.
No, I mean, I think it's, you know, it's going to start looking a lot more like the tobacco and alcohol business. I think the one thing that really separates tobacco and alcohol from cannabis is tobacco is very similar to cannabis in the sense that you have the product. The product is the raw ingredients, in a sense, the leaf, the things that go into the roll, etc. Whereas alcohol is using the product as part of the finished, as a raw ingredient and part of the finished product. So I think there's going to be a dichotomy in terms of people who are using it as part of a overall solution. So for example, you know, people who are in the gummies, people who are selling products related to the use of the cannabis are going to react a lot differently to companies that are, you know, cultivators that are small dispensaries might have to switch the way that they're operating. You know, maybe the idea of a small dispensary with a grow op in the back might not be as much of it'll be more of a novelty as opposed to like a boutique, because you're going to have a lot of, on the grow side, you're going to have a lot of aggregation with the large players. You know, maybe you'll have a quote unquote RJ Reynolds that would come in and start creating a large growery operation that's going to produce a large amount of capital of products. So I think we're very, very far away from that. That's more of, I would say, dystopian, I would say. I think in many ways, I think we're going to continue to stay at this level for a very long time.
Yeah.
I think that, you want to say this? Go.
Yeah, I mean, I try to not look at the end game. I feel like we've been burned quite a bit trying to like figure out what a world would look like. What it really boils down to is, I think cultivation, if you grow really good cannabis at a low price, and you could do it in a battle-tested market, California, Oregon, Colorado, and Washington, and you could export that playbook into other states, you know, those are the kind of companies you want to look at, is companies that could win in really, really competitive markets. So when I look at the industry, you know, what is the game right now? Like, we're sitting in this chair. I mean, in 2015, we were working together, right? And we're looking at what the industry could be. It's 9 years later. I got a lot of gray hair from this space. And it's tough to play that game. So the way I look at it is cultivation, another good investor, a friend of mine, he calls it diseconomies of scale. The larger that these cultivation facilities seem to get, the more uneconomical in certain aspects that they become. So in certain regards, some people have nailed down scale. But when I look at it, I think cultivation, if you can build a business, you have a really strong CPG, a brand that people there's an affinity towards, that's great. The one segment that I do kind of steer clear of, or I kind of think could have an apocalyptic event, is retail. When I look at retail, retail's an interesting avenue. Do we leave this dispensary model as is, or do we start to see convenience stores potentially carry this in like a post-federal legalization world? You know, that's a very big what if. So to me, retail is the one that, like, if you have a retail dominant approach, you know, think about, but I don't think that day's coming anytime soon.
I mean, even if you look at Amsterdam, I mean, they have overseas, I mean, it's still a very localized, very niche market in the sense that, you know, you can't just go to a drugstore and buy a cannabis. You know, there are special
Coffee shops.
Coffee shops, what they call them, yeah. So you can just go there, and, you know, it's still very niche and segmented.
So, like, you know, heading into 2025, I think Adam hit on stuff that we used to do together in 2015. Now we're heading into 25. 10 years ago, what have caught you off guard, and what has changed unexpectedly in a good way, if you could look back and advise yourself in 2015?
Well, I think, no pun intended, there's been a lot of weeding out of the bad players. You know, I think the industry's become a lot more professionalized, and they've been able to recruit talent from, you know, a lot of other conventional industries. I think there has been more consumer education and awareness too about the product. You know, consumers are gravitating now towards quality and safety and all of the things that you should be paying attention to if you're consuming something that goes into your body. As I said earlier, one of the things that's changed is, I think, you know, people are paying attention to financial performance and fundamentals of businesses and sustainability. I think there has been some squeezing of the black market too in certain areas, so, you know, that's been, you know, to the benefit of the legitimate players. Going back to Brett's earlier question, I didn't have a chance to interject, but I think one of the things that will also change with federal legality is the ability for companies to scale. You know, as you may know right now, you know, you have to set up separate operations, or you have to partner with somebody in a different market, and so you don't get the full margin. And if you could have interstate commerce and, you know, set up your operation in one state but ship it nationwide, or even export it, you know, that would be tremendous in terms of profitability. So, you know, there's been a lot of evolution of the industry over these years. It still has a long way to go, but there has been some positive improvements.
On the valuation side, obviously the macro view of the industry is squashed. To be nice to some of the public companies here and outside. And if that's the bellwether, how do you get comfortable with now you're seeing companies starting to restate their earnings, restate financial reports, thinking 280E, they don't have to pay it? How do you get comfortable with, you know, the industry leaders and management when that is happening, and what do you guys do to alleviate some of that?
I mean, the 280E to me is the biggest one. That is, I mean, I don't know. I think 80% of the companies I look at right now are not paying it. But like, how do I look at this stuff? I don't look at EBITDA. I try to look at after tax, right, what the business should be paying and what the business would otherwise be making. Can it support my interest payment or the rent payment, assuming they paid the taxes? Nobody, I mean, really, like, you know, some of the biggest, the most legitimate companies aren't doing it. But I try to look at it as best I can as what should their taxes be. I mean, when groups haven't paid taxes for years, at the minimum, I need them to be on a payment plan, right? It could be a heavily reduced payment plan, but like, if they're not on a payment plan, I'm not gonna invest.
Yeah, I agree with you, Kyle. Is that you have to take a look what the true earnings are of the company, but at the end of the day, it is a liability that they are accountable for. So, you know, the first question any buyer always has to say, are they current with their 280E tax? Because if they're not, or any tax for that matter, or any liability for that matter, because, you know, one, even though the company, absent the 280E, could be profitable or more profitable than it is, they still have to reckon with that until the law changes. So I think that's a problem. But I think it also speaks fundamentally the integrity of the client, of the company is, no matter what you think about 280E, whether it's justified or not, it is a financial obligation, and if they're not paying it, I think it speaks volumes as to, what kind of an operator they are, and a lot of buyers, will dismiss the transaction if they don't see that everything is being done by the book,
I mean, on our side, when we lend, if it's not if it's a cash-based business, so not all of our clients are taking cashless ATM, which is something that I actually recommend our clients to do. If somebody does a cashless ATM transaction, they're going to spend about 10 to 15% more than what if they would just have the cash in hand. So the amount of money that a retailer would spend for the cashless ATM fees, sometimes they'll even create a rebate, so it might actually be a revenue item. But in absence of cashless ATM, we do take a look at all the tax reporting, and so for us, it's almost fundamental that if they're not reporting their taxes, they're not paying their taxes, they're not looking at what is there, there's nothing for us to lend on. So if somebody says, hey, we're a purely cash business, okay, great, but what are you actually reporting to the government? So that's a big thing for us.
And switching topics a little, Europe, the international market seems to be hot, interesting, maybe a little 5 to 6 years, 7 years behind us. Anything that you guys would look at there, or lessons learned in the US that you could bring to investing in the space in Europe?
If they're really 5 years behind us, it's a scary time.
Right.
And we're like real estate backed people, so like there's all international real estate laws. We just do stuff in the US, no Canada, whatever. But yeah, if they're really a few years behind us, then it's maybe a scary time to be investing internationally. But I don't know much about it because I'm really just a US guy.
Anyone else looking at Europe? Peter, M&A,
Yeah,
Adam, investing?
I'm predominantly US too, but I think Germany might be one of the more promising markets within the continent.
I think at first conference here, I think was 7 years ago. I might have been on a panel either speaking or moderating, and as times have changed, no one here is talking about, because I would get the question, probably Adam was with me, what do I think of MedMen stock? That was, everyone said, what do I think of MedMen stock 7 years ago? So obviously MedMen's not around in the fashion that it was. Leadership has changed. Company had a huge amount of market cap, I will be nice to say compression. But going forward, what do you guys look at as far as not only sector or subsector, but what do you look at as a company as far as, is it the leadership obviously to me should be the first, but what else, what other traits that you look at? Obviously Kyle is a little different than most people here, but Adam, what are you looking at for a company going forward?
I mean, you have to be honest with yourself. Over the last 9 years, I mean, the best place to sit was in real estate and lending. And those have been two of the best pockets to sit in versus equity. I mean, equity has not worked out for many. And things are capital markets, they're cycles. We might be another 4 years of Rainbow probably having significant outperformance versus just your general benchmarks. And then maybe they shift into warrants as they see maybe the market start shifting, and then they want to play the equity side. So I think people need to be honest. You need to take a holistic view of the industry. I think you need to see where the capital markets are. Real estate and lending has been the two best segments in the space if you played those right. But when you look at the equity side, I really, I've run a very concentrated portfolio. I only own 3 companies. They all make money. They're battle tested. They've participated in either Colorado, California, Washington, and Oregon, and they've delivered a profit there, and they're taking the strategy across state lines. They have either a box, a 50,000 square foot box that they're going to plop around the country, and that's their model, or they're a retail chain or whatever it is, but they make money and they have some sort of niche. So to me, it's I want to, I alluded to like public school football versus private school. I mean, I played private school, middle school football and for a year, and I was quarterback. I was 95 pounds and did not get touched, didn't get hurt. Then I went to public school and the kids were a little bit bigger, and all of a sudden I wasn't on the team for a long time. But that's kind of how it is in the cannabis industry. I think a lot of companies, they hide out in safe markets. They go to very ultra limited license markets. They love it when the price per pound is $25, $3,000, $3,500 wholesale. Make money hand over fist. The licensing regime opens up, and then all of a sudden prices compress to $1,500, $1,000, or sub $1,000, and you read press releases saying the company leaves the state. So to me, it's like, I want to invest in the public school football teams. They know how to play the game in the toughest of tough environments, and they can export the playbook into less competitive markets and thrive really well. So that's kind of my thesis on the industry.
I actually totally agree, because like, especially on like just the real estate lending side, I mean, there are so many lenders that have said, oh, we won't look at anything in California. Oh, we won't look at anything in Colorado. And like, to your point, I've done deals in both those states, and I actually think I've done some of my best deals in those states, because it's like, I did a deal with the second largest, distillate and vape distributor in California. They do $100 million a year in revenue. Like, that's a legit business. I did a deal with a guy in California who, I know it sounds crazy, he sells weed at like $3,200, $3,300 a pound wholesale, because he grows the best weed ever. And it's like, you could see 5 years of sales and realize that this guy's a winner, right? So it's like, yeah, there's been this like default, oh, we're only going to do stuff in Ohio and New Jersey or whatever. And like, to your point, Adam, it's easy in the beginning, but it can change really quickly. And I like the battle-tested companies also. And I actually think you're like finding better opportunities in some of those states, because the very few lenders there are have all said, oh, I'm not touching Colorado. So that's it.
Well, I think
right. And in states like Colorado, you have had that benefit of seeing, the maturity of these businesses over a longer period of time, and so they have a track record.
Yeah.
You go into these new markets, and while they don't, they haven't suffered from some of the problems like Colorado, California. You also don't have the track record and the history to draw from. So, I would much rather bet on a company that's still around and still and has proven their sustainability in a mature market.
And think
And then just into your comment, Brett, about MedMen, I mean, it was just gross mismanagement. I mean, there's nothing. They were bad stewards of capital. They had a lot of bad practices, and it came back to haunt them. And that happens in any
and I
business.
think that you guys all hit on it. Certainly, Adam and Kyle talking about industry subsectors and states, but it really comes down to the leadership of those companies.
Totally.
Like Kyle said, he's in states that people might not want, but I'm sure he lent money based on experience, pedigree, and successes of the leadership team, which I think all of us would admit now is getting better. I mean, founders came into the company from a black market industry. Their father was a grower, their grandfather was a grower. I think now also going forward in 2024 and 25, we have data and analog that we can look back and saying, well, you know what? That company is just a product or a service or a technology. Maybe they don't have a leadership team around that. So, on that, what do you guys look for as far as when you're investing? Not look for, but are there any other things that you would do to help these companies as an active investor, where you could lean in a nascent industry, because you guys all were battle tested in this industry and have been doing it a long time? Is that something that is mandated that you have to do? I know, Kyle, you sit in a different, you're a lender.
Yeah, well, we still do it all the time. I mean, we want our companies to succeed, right? Like, I've noticed over the last year that like what people pay for packaging in this industry is just way, way above what it costs. So it's like, I've found a package sourcing company. I hooked up a few of my borrowers with them, and they're saving 20, 30% on their stuff, right? So it's like, no matter what, we want our borrower to be profitable and to succeed, because then they can pay us. And it's such a small industry. I mean, like, I've been doing this full time for 6 years. Like, when you really get down to it, it's kind of a small world out there. So like, we've got retailers and growers in the same state. Of course you hook them up, right? Like, and so, I mean, yeah, it's a very, we try to help each other.
Right, I think all of us,
industry.
cannabis is a new rodeo, and you could look at it as just a new asset class or an ingredient part of a big asset class, but it wasn't all of our first foray into investing. So you would still look at those same things that you would want any company to have as qualities for an investment. And I think that's kind of the theme of the market that we're in now, a tight capital market, as our panel title is. You still have to seek the best in breed, better product differentiating if it was a brand, certainly great leadership, real estate, you know, being on Main and Main, or a great cultivation facility that you could repurpose if something goes bad. But I think for all of us here, there's still a huge demand for this product.
Yeah, I don't think it's certainly not what the operator wants to hear, right? Like, it's not what you guys necessarily want to hear, but like, you have the luxury of being extremely selective with who you work with, like, and you should be. If you're one of the only people in the space who has capital available, you know, I think demand for capital exceeds supply 30 or 40x in this industry. So yeah, like, you'd be irresponsible, and you're a shepherd of capital too, right? So like, you have to be pretty selective.
No, I agree. I mean,
it all goes in.
when we were investing, and I would expect the target companies to interview us too.
Yeah.
Like, we're not just drunk guys with a bachelor party sitting around like we have money, but I think that you have to really qualify and quantify what you as an issuer would look for an investor. Are there certain things they can help me with? Are they just as good shepherding us that we need to be in a new asset class in a nascent industry? And I think, like Adam mentioned, battle testing, I think that's important for someone to look at as an investor. Like, are they battle tested? What happens if things go bad? Could they help me with M&A activity? Are they going to be around for follow-on offerings? And I think now we do have this funding gap on the equity side. Maybe, you know, I know Adam could hit on it, and certainly Ari and Peter. What else? Do you see a timeline for, like, you know, a private company exit really not there anymore, other than maybe depressed and distressed assets being merged together? But when you see something going bad, or let's say, for an example, a founder, how do you deal with a founder who thinks the valuation the companies will never keep going, you know, valuation keep going up? Is there conflicts that arise in early stage investing with founders?
Yeah, I mean, you still have this phenomenon of unrealistic expectations for valuations by many founders, because it just hasn't registered that the market has corrected itself, and you know, all of the same points that you mentioned, Brett. That, you know, the first thing you always look at is who's running the ship. You know, do they have like real experience and you know, the skills to do the job? Do they surround themselves with all of the talent necessary in all the different functions of the business? You know, has the company had experience with things not going according to their business plan, and how did they deal with that? You know, and have they been good shepherds of their own capital? You know, they raise capital, but many of them have blown through, you know, tens or hundreds of millions of dollars, and you know, but there are many companies, examples of companies where they may not be as large and not of scale, but they've been really, really responsible at how they spend their money. And so those are like all important tests that one looks at to the quality of a business. So yeah, but the thing about valuations is, look, you know, it is what it is. You know, you can look at all the metrics in the world, you know, but if the buyer doesn't see the intrinsic value of that company and isn't, you know, willing to, you know, meet the expectations of the seller, you know, you don't have a transaction. And so it's partly, you know, educating the sellers as to, you know, what their business is and why it even should it be in existence. I mean, there are literally thousands of cannabis companies out there that are all doing the same thing. Okay, so you have to ask yourself, what is differentiating this business from the hundreds of others that are producing vape pens or producing edibles, or, you know, even, you know, distribution businesses? And unless you can answer something that truly is, you know, unique, that business probably ought not to exist, quite frankly. And that's the problem, I think, is that initially everybody jumped in thinking that they had built a better mousetrap, and the market is pretty efficient, and it determines, you know, which ones are truly the winners. And so I think, you know, at least with my client base, you know, many of them are still up there, got their head in their clouds, but a lot of them have had a dose of reality, and they're now willing to at least be open-minded to what the market might offer.
Mm-hmm. Yeah, I'll keep this very short. I think there's 3 kinds of companies in the space. There's the culturally connected company that have no business sense but know the plant inside and out. Then there's the finance person who wears a suit and knows spreadsheets better than anybody but does not know how to grow cannabis. And then you find this concentric circle, whether it's those 2 people who meet or it is that one individual that is culturally connected and understands capital allocation, and that's where the magic happens.
Yeah, I think with that, you know, panel's about to end. We're coming up to, you know, thank Rob for putting us at the end of the day, right before the cocktail hour, coming up to 4:20. I hope you guys gleaned some knowledge. I did. If there's any questions for the panel or anyone have anything, please feel free to ask.
I have a quick question. In terms of Florida, I think there's a pretty unique environment here where, assuming Amendment 3 gets passed, where you have a step change in demand on top of a pretty scaled medical industry, scaled so much that I think based on stats I've seen, your dispensary numbers are, in terms of population, are comparable to California. How do investors, both buy side and sell side, think about that? I know here you talk about you need to think about phasing in. It's easy to phase in when there's nothing there, but if you are phasing in, and the other thing we've seen is about 18 months before prices just tank after that kind of recreational consumer play, and you already have a scaled industry here. How do you reconcile sort of those 2 points, and how do you address that for investors?
Anyone want to weigh in?
Okay, so your question once again was,
Just that you have step demand on top of scale, and there's also sort of a recommendation of phasing your investment, given you don't want to leverage like we've seen in the past. So how does the buy side and sell side think about that as it relates to Florida specifically and the opportunities in Florida?
Well, we're on the debt side, so we're lending you to create another phase in your business. So for us, what we're looking at is your track record. So how successful have you been previously? So if you were successful and you've had experience in being you know, a good operator, and let's say you want to add a dispensary, so we're going to look at that and we're going to value what your previous experience is going to be, because we're going to use that as a predictor of future performance. So we're also short term, so short to midterm. Most of our lending vehicles are less than 24 months. We do have working capital programs that can be longer, but what we're looking for is really your past performance. So in terms of phasing in, you know, we're gonna want to see, obviously, you know, you're gonna want to take it one step at a time. We're not gonna, you know, if you're gonna come and say, hey, we're gonna do a marketing operation, we're gonna do a retail operation, we're gonna do a grow operation, we're gonna do all of these 15 different facets, and we need all of this money up front, we're gonna say, okay, well, listen, let's try to narrow it down. Where's gonna be your place that you're gonna want to input capital first? And that's kind of how we're gonna try to approach it. And then we're gonna say, okay, let's start out on the starter plan, see how you can produce with it, and then we'll provide additional debt for your business.
So I think maybe you were like asking like the feverish nature of like what might happen, right? Like from like how do you account for like the supply that's currently on the market, and like like the game theory of how others will act when this passes and is enacted, and forecast it. Yeah.
The game theory that there's very little opportunity to see step change on a $2 billion already market that is going to likely, assuming the congressional process doesn't squash the opportunity for regulation growth. We did see a $2 billion change in 2 years. We have not seen a market in the U.S. move that quick in the last few years.
Yeah. The four. Yeah.
I'm just curious, even on the
4 of us are going to get a lot of phone calls in a month from now. They're going to try to leverage real estate. They're going to try to do investment banking services.
I think I understand your question, and it's like anything. You know, you have to structure the investment or the purchase of the company in such a way that you, as the investor or the buyer, are going to feel comfortable with what one anticipates that step change will be. So if the seller, for instance, or the issuer of the capital is saying, I'm going to go from 10 million to 50 million, in 1 year, once 3 passes, you say, okay, that's fine, but you know what? I'm going to assume that you're only going to go from 10 to maybe 15 million, in next year, and I'm going to give you that capital, or I will base my purchase price on that valuation. And if indeed you do hit those milestones that you project, then there might be more money coming to you from the buyer in an earn-out. Or with an investor, they say, okay, I'll write you a second check, once you hit that next milestone. So, I think the capital as well as the buyer community are going to ride that curve along with the operator.
Florida still obviously is a vertical market, so it's still going to be constrained by, a grower and then processor and then selling in your own retail stores. So yes, the step change, will be incremental, but I don't think it's going to be rushed in as far as adult use. I think the basket size will be easy to access capital, but if there's a store, if there's a True Leaf store or a Cure Leaf store, it's going to be a challenge to get another store, closer, just because adult use is coming. And it's still huge capital outlay. I mean, to build a facility, not only to compete with the market, the 22 license holders here, but just to compete with the current demand for this product when adult use happens. And also, the infrastructure is not here yet as far as these things happen. What happens to the million patients here in the state of Florida and their access to medical cannabis? I mean, I think there's going to be a challenging time. November 3rd happens, November 5th, November 6th, November 7th. What's the governor going to do if a vote does go with Amendment 3? I don't think there's any plant touching, any cultivators or there's ancillary companies that trade in OTC market that service the Florida market, that sell products, service technologies to this industry, but I don't believe there's any, until it goes federally legal, it can't change.
But if you're a
can't trade on an
company,
exchange.
You can list on New York Stock Exchange or on OTC or on NASDAQ because it's federally legal in Canada. So it is, it's a big disadvantage.
Yes.
Yeah, most likely. That's why all the U.S. companies list in the Canadian exchanges, because they can't list here. But the same does not hold true for the Canadian companies. They can actually list here.
Right.
Yeah.
Last question, I think.
Yeah, just an observation. So the industry is actually expanding. It's doing quite well. Okay. And the observation is, it's really bad out there. So I kind of, just as an observation, I kind of have been in a lot of other industries in my life. I kind of see this as just maturity, okay, and shooting in the foot. But when you've got this level of external growth happening to the market, and whether you've got too much supply due to price compression, you've got all these other factors, people who shouldn't be in the industry and everything else. But it seems to me like there should be some real winning spots in the market. So I'm just curious to hear where you think the winning spots are in the market.
Great last question. You guys want to weigh in on kind of best ideas where you would put capital 2024 to 25?
Yeah, I think technology, anything that can be applied industry-wide and that can scale, and it's ancillary and you're not subject to the regulations.
Adam?
There's companies that are buying back stock right now who think their shares are too cheap. I mean, there's good capital allocation. I mean, I think looking at these businesses on a tax-adjusted cash flow basis I think it reveals quite a bit. If you read kind of the press releases, the adjusted EBITDA and all these different fancy metrics that don't mean much, when you start to like normalize these businesses, it's pretty apparent what's going on right now. And there's a handful of companies that are generating buckets of money, reinvesting it, and have a great pipeline of growth. And the other thing is like, you don't have, like, think about it, for Florida, you already built the store. The traffic is the variable that's gonna change the metrics in Florida. So it's, for example, you just have to add maybe a handful of terminals, you already have the rent, you're paying the same rent. Your landlord's not gonna jack up the rent because now it's an adult use store. So you see margin expansion initially, right? Because prices do normalize. I hate the word compression, they normalize. And over time, you know, what businesses can make money in a $1,000 pound wholesale market? And I think you'll do pretty good if you find those companies.
Yeah, I actually agree with Peter. I mean, if you're going to put money somewhere, put it in technology, because you know you can build the best dispensary in the world, but if you have a technology behind it that's something super unique, even if your dispensary goes bust, somebody's going to want to buy your technology.
It depends what sort of return you're looking for at the end of the day, right? If you're looking to kind of double your money, you know, over a period of a couple of years in a really safe way, like you can get really outsized returns on real estate stuff that should yield 8%. You get more than twice that, right? But it's a really low level of risk. You probably can't lose your principal. You can also try to make 5 times, 10 times your money on investing in a pre-licensed state, and you could hit it, or you could lose all your capital, right? So it's like, you want to kind of go for the high risk, high reward. You want to go for something in the middle. Those options are out here, but I think you're hearing it from everyone. Like the ancillary sort of parts of the industry are good hedges if you're not willing to go all in on one company or one situation or one piece of legislation.
Okay, with that, thank everyone for coming. Enjoy the rest of the conference.
Ladies and gentlemen, let's give it up for our last and final panel of the day. Thank you very much. All right, who's ready for happy hour?